European banks have long not been looked at for some time. The financial crisis hitting them especially hard, plus the euro crisis once again pushing them back down. But now, over the last few years, European banks, especially Deutsche Bank, have performed quite well. So let's look into it. Is this still a buy? Are the risks very high here? We can see there's not a lot of growth here. They have been shrinking for some time. They have just returned to growth back since the pandemic. And for that, you have to know the history of Deutsche Bank. Deutsche Bank had a lot of scandals. They grew way too much, so they kinda shrank themselves down. They closed a lot of stuff, focused back on their core business, and now they're slowly returning back to growing in those segments. And that's why they have only been profitable since around 2020. Profitability swings around quite a lot, but overall they have returned to profitability now. However, one thing that's very interesting, despite interest rates rising in Europe, and generally around the world you see it, if interest rates rise, bank interest income also rises, because while the interest rate might go to 5%, the banks might only give on 4%. But that is not really the case anymore, because in Europe, a lot of fintech has come into play. For example, Trade Republic. They started off as a brokerage, it's one of the brokerages I use, and they have slowly evolved into a bank. And what they do is they give on the full ECB rate, so the full interest rate, onto your deposit. And if that is your competition, you can't just easily keep the interest rate. Of course, you have old people who just keep the bank account, keep the money in there, don't care about the interest rate, but competition has increased here. So net interest income, you don't really make a lot there anymore. However, non-interest income is where they have really grown over the last few years after shrinking themselves down. And one important thing for banks is the tangible book value. So basically, if you were to sell off the entire bank, what would you have left? Ignoring all the goodwill. And here you have 36 euros a share. Very interesting, on not even 20 euros. And that discount was even harsher. It was at 0.22. We're currently only trading at 0.4. We were trading down to 0.22 before, that's why the stock has rallied so much. And the bank is currently buying back a lot of shares. And buying back shares as a bank at less than half tangible book value, that is really shareholder value positive. So with them also paying a dividend at the same time, then we have to think, okay, their plan worked out so far. Shrinking down the bank to the more profitable segments and growing your core segments. That really turned the ship around. But okay, is this going to continue working in the future? Because then it's probably a decent buy. Forward P of 6, 3.6% dividend yield, 4% buybacks, growing tangible book value, heavy discount. Their private bank is what they're most known for, their bank accounts. Outside of Germany, they're known very for investment banking. And this is kind of where they were hit hard during the financial crisis, where they took a lot of losses. They have scaled this down a lot. It was way bigger before. But the biggest segments are still the corporate bank together with the private bank. So bank accounts for companies, individuals, loans for those. This is still where they make most of their money. They have some small asset management. It's not a lot though. Investment banking is kind of why banks are so cyclical. Why this is very high margin. This is very volatile. Of course, there are some repetitive revenues in there, but overall this is very volatile, and this can easily halve. That is 5 billion of revenue that goes away, and there goes your entire profit for a year. That is why banks can be so risky during bad times. So if half of this goes away and just slight slowdown somewhere else, that can really send the bank down. That is why I don't really like investment banks that much. I like that they have focused more on their core part, but this is still a big risk for Deutsche Bank. One other thing as a bank you can do, especially with these legacy banks, they are very bloated. They cut a lot of costs. They achieve most of it. They say they still can achieve a lot of savings. And of course, if you have 2.5 billion euros in savings, if your net income is 5 billion, that is a 50% growth in net income. They have achieved most of these savings already. Let's see if I can get more. I am uncertain because all of these savings are going to be passed along. Competition in the private banking space and corporate, especially in the private banking space in Europe, is currently increasing much. I mentioned these fintechs before, they're entering the markets very bigly. Currently we're only getting a lot of young customers, while older customers are still staying with the old banks. Deutsche Bank, Sparkasse, ING, but mostly bank accounts cost 0 euros now to maintain. They pay you a very good interest rate with the new banks. That just drives down profit here. So that is the issue I see for Deutsche Bank in the future. I think they will be able to compete there, but the issue is how profitable it will be for them. They are trying to hit 10% returns on the tangible equity. Currently, if you ignore some litigation, we're at 7.1%. Now, of course, they're showing how the tangible book value per share has increased dramatically, while they have been issuing a lot of share buybacks and dividends. However, you have to know, they're not paying out that much in dividends. They're currently paying around 1 billion in dividends out. And when we're hovering between 3 and 5 billion in net income, let's call it 25% on average, obviously your tangible book value is gonna grow per share a lot there. Now, what other issues I see with Deutsche Bank? I think Deutsche Bank has been mostly cleared up. They have shrunk down a lot, focused on their core businesses, and I can now expand those. Issues, they face a lot of competition in the home market, Europe. Fintechs are going to compete with them a lot. They offer way better terms, and Deutsche Bank is not really known for the most cheap products. And I think that's only gonna start ramping up over the next few years. It's not gonna be currently seen because most of the income still comes from older people who do not that easily switch to fintechs, and the fintechs have not hit that business segment that hard for it. But a lot of younger people under the age of 30 are already switching their accounts to these fintechs companies. But in exchange, you have a fantastic PE ratio, nice dividend, nice share buybacks, and a growing tangible book value. So the risk here is that profitability collapses. So what would I be willing to pay for Deutsche Bank? Let's look into it. Profits at Deutsche Bank are kind of volatile. However, over the average and what is expected to happen over the next few years, I think 2.5 is a good starting point. They have very high growth expectations, but I do not believe in those. Competition is increasing in the retail sector and the corporate sector. So margins are gonna be squeezed here. Let's go 3% in revenue growth, plus 3% in share buybacks. And what for multiple do you get? Deutsche Bank is not as solid as JP Morgan, however, let's just give them a 10 multiple. Payout ratio of 35% with a little deduction due to taxes, we come to 22 euros a share. That is a 19% discount to where we are today. So we get more than our 10% return, and we still have a slight margin of safety. So from this perspective, you could say Deutsche Bank is not a horrible buy, and especially if it goes better, just slightly higher revenue growth, slightly higher multiple, well then we already come to 30 euros. Now, normally on this sheet, I always have my worst possibility. And that is not really possible with banks, because with banks, the worst possibility is bankruptcy. And that can happen from one year to the other. And, well, you know, if I just put this into the sheet, let's just say randomly, minus 100%. No, oh, okay, yeah, we still have some value because of a dividend here, but but you can see you can't really show that well. So in this case, the worst scenario is just kinda what happens if a bank underperforms. And that is 3% growth over the next 10 years. So basically only share buybacks. Well then, the downside is not even that big. 13 euros. I think there's a lot of risk with Deutsche Bank. They're still going away from this scandal bank to a normal bank. And the European banking sector is not as healthy as the American one. If there's another euro crisis, I don't know if Deutsche Bank is going to go through it that well. They're just not that well positioned. I won't add it to my portfolio. I don't really like banks that much. So for me to buy a bank, it would have to have a huge discount. So I'm passing for now, but I don't think it's a horrible buy. What do you think? Write down below. Have a good day.